This is Nightly Business Report with Bill Griffith and Sue Herrera.
High hopes. President Trump plans to meet now with China's chief trade negotiator, and investors take it as a potential sign of progress in the two-year-old trade war. Bed Bath and way beyond. The stock stages its biggest rally in 10 years as investors bet the new CEO will lead a corporate turnaround. And changing retirement, the rules are different, and savers are trying to navigate the new normal. Those stories and much more tonight on Nightly Business Report for this Thursday, October 10th. And we do bid you a good evening, everybody, and welcome. Sue is off tonight. Another tweet, another rally. President Trump took to Twitter today to say that he will meet with a key Chinese official on trade tomorrow. And late today, he said the talks between the negotiators have gone well so far. That was good enough for traders. The Dow Jones Industrial Average was up 150 points today to 26,496. NASDAQ was up 47. The S&P added 18. Kayla Tausche starts us off tonight from Washington.
Handshakes and smiles at the onset of highly anticipated trade talks Thursday after 3 days of media brawls and a threat to cut the visit short. Liu He, China's vice premier, greeted by Ambassador Robert Lighthizer and Treasury Secretary Steven Mnuchin, joined by a delegation of 36 Chinese officials. Despite 7 hours of high-level talks behind closed doors, the biggest news came on Twitter. President Trump saying he'll meet the vice premier at the White House tomorrow, tweeting, "China wants to do a deal, but do I?" Stock market investors are betting he does, since Liu He's last 3 visits were accompanied by positive news. In January, announcing Beijing would purchase 5 million metric tons of American soybeans.
Hopefully they're going to buy lots of corn and lots of wheat and lots of everything else that we have.
A February visit resulted in a tariff delay, and an April visit focused on a forthcoming meeting where Trump and President Xi would close the deal.
The deal is coming along really well. We'll probably know over the next 4 weeks.
Shortly after that, talks broke down, resulting in tariffs on hundreds of billions of dollars in additional goods. But that was then. 2 former White House officials say the fact that the president is announcing the meeting suggests that China has made a legitimate offer that he might be ready to accept. For Nightly Business Report, I'm Kayla Tausche in Washington.
Yes, trade is very important to Wall Street right now, but it is just one of the issues investors are paying close attention to. Here's Bob Pisani at the New York Stock Exchange.
Stocks rallied as U.S. and Chinese officials met for high-level trade talks in Washington. The Dow spiked around 9:50 a.m. Eastern Time when President Donald Trump tweeted that he and the Chinese vice premier would be meeting at the White House tomorrow. Regardless, the bar is pretty low right now. The market seems content with any kind of mini deal or even just a truce for the moment that might involve, say, buying agricultural products in exchange for no new tariffs coming into effect next week. But the usual trade-related sectors like China stocks and materials and energy industrials, they all rose today. Now, beyond trade, UK Prime Minister Boris Johnson met with his Irish counterpart today and issued a joint statement saying the two sides are seeing a pathway to a possible deal on Brexit, or the British exit from the EU. Elsewhere, shares of PG&E plummeted 30% after a judge opened the door to a rival bankruptcy plan from activist Elliott Management and other bondholders, which would allow them to seize control of the company at what PG&E calls a substantial discount. This also comes after PG&E shut off power in Northern California last night, impacting roughly 750,000 customers. The utility says it could take 5 days or longer to restore power. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
In other news, the government said today that the Consumer Price Index was flat in September. Expectations were for a slight increase. A decline in energy and used car prices capped any inflationary pressures. And earlier this week, remember, another report showed an unexpected decline in producer prices. Economists say that those 2 reports show the trade war so far is having a limited impact on inflation. And along those lines, a federal official at the Federal Reserve today said that the central bank should continue to cut interest rates. The president of the Minneapolis Fed, Neil Kashkari, pointed to slowing global growth, weakening businesses, investment, and those inflation numbers that have been below the central bank's target. as reasons to keep cutting. But Kashkari added that while he's happy the Fed is lowering rates, he's not sure how many more reductions are going to be needed. Elsewhere, OPEC has trimmed its forecast for oil demand growth for the third month in a row. In a closely watched report, the cartel cited weaker than expected economic data out of the Asia-Pacific region and also the Americas. The outlook could put pressure on some of the world's most powerful oil-producing nations to impose a deeper round of production cuts when they meet in December. Despite the soft outlook, the price of oil rose in today's session. Two stocks made very big moves today, Bed Bath & Beyond and PG&E. Let's start with Bed Bath & Beyond. We told you last night the struggling retailer had finally hired a new CEO, and today investors cheered that news, sending the stock up 21%. Courtney Reagan tells us why the market thinks Mark Tritton is the man to turn the company around.
Target's loss is Bed Bath & Beyond's gain. Target's chief merchant is taking the top job at Bed Bath & Beyond in November in an attempt to turn around the struggling home goods retailer. Bed Bath & Beyond's market share has eroded, with merchandise that failed to excite shoppers and a digital strategy that's fallen behind competitors. A trio of activists bought shares of the home goods retailer and petitioned the company for change, which is now underway. Chris Kuiper, one of the key activists at Legion Partners Asset Management, told me, quote, "Mark Tritton is a superstar talent. We are so excited that he is joining Bed Bath & Beyond. We believe Mark Tritton has the skills to return Bed Bath & Beyond to greatness." During his 3 years at Target, Tritton was a key part of the leadership team that reinvigorated tired stores and upgraded merchandise, from the products, how they're priced, and how merchandise is presented to shoppers. He was part of the strategy to use stores as fulfillment centers for online orders, which lowered costs and proved to increase convenience for many shoppers. Tritton helped develop new private label brands at Target and reinvigorated tired ones, including a number of home goods lines. Because private label brands by design are exclusive to the retailer that develops them, there's more pricing control and thus higher profitability than national brands. A third of Target sales are private label goods and only about 10% of Bed Bath & Beyond's. Improving private label is a key part of the turnaround strategy at the home goods retailer. Target was sputtering when Tritton joined from Nordstrom, but it wasn't in as dire a scenario as Bed Bath & Beyond. Tritton hasn't been a CEO before, and it's not clear how long it will take for big changes to take effect. But today, Bed Bath & Beyond investors have hope for the future. For Nightly Business Report, I'm Courtney Reagan at the New York Stock Exchange.
It was certainly a different story for PG&E. As we reported last night, and as Bob Pisani mentioned earlier in the program, a judge opened the door to a rival bankruptcy plan, and that sent the stock down by nearly 30% in today's session. Meanwhile, as you've heard, hundreds of thousands of the utility's customers remain without power today during a self-imposed blackout, affecting households, businesses, and potentially the local economy. Josh Lipton is in Berkeley, California for us tonight.
Gusts of wind as strong as 77 miles per hour hit parts of California today, and that has PG&E nervous. The worry is that those high winds could damage infrastructure, leading to devastating wildfires, like the catastrophes last year in places like Paradise, California. So PG&E is shutting down power to hundreds of thousands of California customers, roughly 10% of its accounts. 34 of 58 counties across the state have been impacted. The utility saying in a statement, "This is not a decision that we take lightly. This is the measure that is needed as a last resort." The outages have resulted in runs on supplies like batteries, coolers, and flashlights, and at gas stations and grocery stores too. The utility says it could take 5 days or longer to restore power, which could result in $2.5 billion in economic damages. Companies are responding as well. Tesla apparently told its California customers to make sure to power up their vehicles. Many might be frustrated with PG&E, though some California residents say they understand the utility's decision.
I've spent 2 days yesterday up in Napa preparing for it, and I'd much rather have them be overly precautious and be able to say, after they turn the power back on, perhaps we help prevent a fire. That's a positive attitude to take. That's a responsible attitude to take.
All this comes at a critical time for PG&E, which sought bankruptcy protection earlier this year, citing liability costs related to fires over the past couple years. A judge has now opened the door to a rival bankruptcy plan, sending the stock sharply lower in today's trading. It's now on track for its worst year on record. For Nightly Business Report, I'm Josh Lipton, Berkeley, California.
Time to take a look at some of today's upgrades and downgrades. We begin with shares of Apple tonight. They were upgraded to buy from neutral at Longbow Research, with the analyst citing recent reports of more demand for iPhones than originally thought. New price target is $260. That stock rose 1% today to $230.09. Morgan Stanley was upgraded to buy from hold at Sandler O'Neill. The analyst cited the stock price, saying it's trading at what he called an unwarranted discount. Price target $48. The stock gained 1.5% today to $41.05. United Healthcare was downgraded to hold from buy at Jefferies. The analyst cited the political overhang affecting the managed care sector right now. Price target $235. Despite the downgrade, though, the stock was up a fraction to $223.73. And Cisco was downgraded to neutral from buy at Goldman Sachs. The analyst says the trade uncertainty is causing business to cut their spending in technology. Price target $48. That stock fell more than 1% today to $46.15. Still ahead, a new normal. The way the people save for retirement is changing, and it may be time to adjust your strategy as well. Delta Airlines reported better than expected earnings today, helped by strong demand, which prompted the airline actually to hire more pilots, flight attendants, and airport workers. But the carrier's revenue came up a bit short of estimates. Costs have also been on the rise. And the CEO said today that Delta's international business is also facing headwinds.
International is choppy. I mean, on the U.S. side, which is our bread and butter, about 2/3 of what we fly is domestic. We were up 8% in the quarter. Internationally, there's been pockets of weakness, particularly in Asia. Certainly, the tariff issues on some of our automotive and heavy manufacturing customers have cut back their travel to Asia. Europe was a bit weaker.
Shares of Delta fell 1.5% today in today's trading session. Now, we all know that Google and Facebook dominate the online ad business, but things are starting to change in the digital media industry, and some surprising winners are emerging. Julia Borston explains.
3 digital media mergers in just 2 weeks. Discovery-backed Group 9 bought Pop Sugar for $300 million. Vice bought Refinery29 for $400 million. And Vox bought New York Magazine for about $105 million. All 3 in all-stock deals. These companies are consolidating in part to better compete with Facebook and Google for ad dollars. Facebook and Google together dominate 60% of all digital advertising revenue in the U.S., according to eMarketer. And while these giants help digital publishers grow, they've also been criticized for changing their algorithms to keep that traffic, stealing ad dollars and eyeballs.
Facebook and Google contributed to the rise of these publishers by allowing them to spread their stories to much larger groups of people. Google in terms of search, in terms of Google News, Facebook in terms of viral social content. But they've also caused lots of problems by swallowing greater and greater shares of digital ad revenues, as that's where people continue to spend their time.
Those digital behemoths have also hurt traditional publishers, such as the New York Times, News Corp, and Gannett, which have suffered with declining ads and subscriptions. But now their stocks are turning around as their newer digital businesses kick in. Year to date, New York Times shares are up about 27%, Gannett shares up 23%, and News Corp shares are up approximately 15%.
Many companies that are successful are pursuing subscription revenues, event revenues, perhaps commerce-type partnerships as well. So it's really about diversification, relying less on advertising, because it doesn't necessarily look like they will be able to pull back large amounts of spending that have been going to Facebook and Google.
And now Google and Facebook are taking steps to help the publishers. Google's new algorithm highlights original reporting in its search results, focusing more on the most reputable publications to drive clicks to original stories rather than to aggregators that repurpose others' reporting. And Facebook is in the process of negotiating to pay publishers to include their content in its coming News tab. Now we're watching to see what kind of deals Facebook strikes and what kind of licensing fees or subscription revenue it drives. For Nightly Business Report, I'm Julia Borston in Los Angeles.
General Motors sees a 5th consecutive quarterly sales decline in China. And that's where we begin tonight's market focus, with the automaker reporting a 17.5% decline in its China vehicle sales due to the ongoing trade war, a slower economy there, and increased competition in its important mid-priced SUV unit. Separately, GM's CEO Mary Barra today met with the United Auto Workers president about the ongoing strike here in the U.S. that is now in its 4th week. Shares rose about 1.5% today to 34.66. Mississippi is dropping its legal challenge against T-Mobile and Sprint's proposed $26 billion merger. That state's attorney general says the combined wireless company has now agreed to bring its high-speed 5G network to Mississippi's rural areas. T-Mobile shares were up a fraction today to $78.30, while Sprint shares were up more than 2% to $6.27. Chemicals maker Kraton expects its full-year profit outlook now to be up to 15% below the low end of its previous forecast. The company cited weak demand in Asia due to the trade war, as well as slowing profits in North America and in Europe. And that stock plummeted about 32% today to $20.42. And then after the bell, Walmart announced that John Furner is going to become the new president and CEO of the retailer's U.S. division starting next month. Furner replaces Greg Foran, who has now taken the job as Air New Zealand's new CEO. Walmart shares were volatile in after-hours trading tonight. After the close of the regular session, it was up a fraction to 119.61. Fidelity now is the latest brokerage to eliminate trading commissions, in this case from $4.95 per online trade to $0. Fidelity and its rivals are working very hard these days to lure more customers with lower cost products and services. And Fidelity also recently unveiled plans to offer higher yields in money market funds for its 21 million accounts. Meantime, the 68 million Americans who receive Social Security benefits are going to get a 1.6% increase in their monthly checks next year. That's equal to about $23 a month for someone who receives the average monthly benefit of $1,460. The percentage increase is more than the average over the past decade, but it is also the lowest raise that they've gotten in the past 3 years. The cost of living adjustment is determined by the Consumer Price Index. Last night, we talked about General Electric freezing pension benefits for 20,000 of its salaried workers and then offering buyouts to 100,000 former employees who haven't started drawing their pension. There is no question that planning for retirement is a lot trickier than it used to be, with the gradual demise of pension plans, record low interest rates, and higher stock market volatility. Joining us tonight to talk about the changing nature of retirement planning, we welcome back Liz Weston, a certified financial planner and personal financial expert at NerdWallet. Good to see you again, Liz. How you been?
Good to see you too, Bill. Thanks.
I think the biggest change we see for retirement planning these days, the word guarantee is long gone, right?
Oh, absolutely. We don't have guarantees anymore, except for Social Security. You do get a guaranteed return when you put off claiming, so that's something you can look forward to.
That assumes,
really,
that assumes, though, that Social Security will be there when you're ready to retire.
Yeah, it'll be there. It's too popular a program to go away. I think if you're close to retirement, you can pretty much count on Social Security giving what it's promising you. I think younger people need to be aware of the fact that if they don't pay attention to it, it could be reduced or eliminated. I don't think it actually will be eliminated, but it could be reduced. They could pay the price if they're not paying attention.
All right, we'll hold you to that. The record low interest rates that we see these days forces people to go to the stock market even more now for their retirement savings, right?
Absolutely. I mean, you can't get a safe return and a high return in the same investment. When you go the safe route, you're going to get a return that doesn't keep up with inflation. That's always been true. But I think in the low return environments we have now, the low safe returns, it's really becoming obvious. The good news is that stocks are the one asset class that outperforms inflation over time. So when you're working, that's where the bulk of your money should be. But even in retirement, you're probably going to live a few decades. So you need to have at least some of your money in the stock market so you can keep up with the rising cost of living.
Is there still a role for bonds in retirement? I mean, I guess certainly higher yielding corporate bonds, but they can be a little risky sometimes. But what about overall debt instruments?
Yeah, I would have. Obviously, diversification is important on both sides of the ledger, whether you're doing stocks or bonds. You don't want to have everything in one basket. So corporate bonds, I would think you want to stay away from junk bonds if you're a retiree, unless you have a real taste for risk. So corporate bonds and a few treasuries, just to keep things balanced out, really important, maybe a little bit in cash. That diversification is what's important. If you try to go all one way or all another, you're going to either take too much risk or you're going to wind up not overcoming inflation, and your buying power is eroded over time.
Some good meat and potatoes advice from Liz Weston with NerdWallet. Good to see you again, Liz. Thanks.
Thank you.
And coming up, a whole new meaning to the term backseat driver.
You want to talk about the future of your ride? Think beyond Uber and Lyft. Think beyond autonomous vehicles to what you're doing in the back seat of your car. And coming up, I'm going to show you what I'm seeing.
While U.S. and Chinese trade negotiators hold their talks in Washington, the NBA is hoping for a truce a world away in China, and all because of that one tweet that we told you about earlier in the week when the general manager of the Houston Rockets made a pro-Hong Kong protest comment. Eunice Yoon has the view from Beijing for us tonight.
The trade talks are starting at a time when the level of drama in the U.S.-China business relationship is especially high. The standoff between the NBA and its Chinese critics continue into today. Houston Rockets Nike products were pulled from store shelves. And today, NBA chief Adam Silver was expected to make a statement before an exhibition game between the Lakers and the Nets in Shanghai. But that briefing was canceled. The Chinese critics of the NBA claimed that 1.4 billion Chinese were hurt by the pro-Hong Kong protester tweet of the Houston Rockets general manager. But the stands at the game were packed, which, based on the turnout, shows that the NBA is keeping at least part of its Chinese fan base. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Finally tonight, the ride-hailing industry provides some 50 million trips every day. And most of those riders have some time on their hands while they're riding in the back seat. Well, now a startup software company is launching a product to keep those riders engaged and entertained. Contessa Brewer is in Los Angeles with what may be the future of the back seat.
So let's put on the headset.
It's like a theme park in the back seat.
Is there any danger of the driver getting hit in the back of the head?
An immersive virtual reality experience incorporating real-time data from the car's computer on braking, speed, and turning.
So the car's stopping, and the game is stopping too.
So it's synchronized in real time. So when the car accelerates, your virtual experience accelerates. So it's way more immersive, and it reduces motion sickness as well.
Holoride CEO Nils Vonnie is in a proof-of-concept phase, partnering with Ford and Universal Pictures for a Halloween experience this month at Universal Hollywood. Vonnie hopes to have his software installed in vehicles by 2021, incorporating gaming, entertainment, even education.
A lot of people want to work while they're on the go, but if they get motion sick, they simply can't. And spatial computing will be the next big computing platform. And if it's motion synchronized, you can be even more productive.
Holoride is not the only one looking at a potential upside here. Think about the manufacturers of these headsets or the content creators, Discovery, Disney, Universal. Ford is particularly interested in what customers have to say after experiencing the HoloRide for Halloween here at Universal.
As we're getting to more connectivity in the vehicle, we're interested in learning about the types of experiences that our customers are interested in.
HoloRide will incentivize car makers to make the software standard in their vehicles and share revenue with them. Porsche is exploring the options, as are Mercedes and Daimler and Audi, which launched HoloRide and still owns a 10% stake in the company. In a statement, Audi tells us in-car entertainment and gaming harbor enormous potential for transforming a routine trip from A to B into a digital experience. And those experiences are likely to be more realistic, more complex, and more mobile.
VR is typically location-based experiences, at-home experiences. This is the first opportunity we've had to take the content that we've been building and put it in a place where consumers are.
And increasingly, the consumers are passengers. With the driverless cars of the future, those commuters may find themselves free to take on other challenges.
I'm having a very hard time interviewing you and shooting demons at the same time, I have to admit.
Yeah. Perhaps it's also what multitasking in the future looks like. In Los Angeles, Contessa Brewer, Nightly Business Report.
Before we go, let's take a final look at the day on Wall Street. Another rally today. The Dow up another 150 points to 26,496. The Nasdaq was up 47, and the S&P added 18. And we have more trade talks tomorrow. Stay tuned. That is Nightly Business Report for tonight. I'm Bill Griffith. Thanks so much for watching. Have a great evening. See you tomorrow.